Hi, in this video, I'm going to talk about term insurance. So this is more like a high level, conceptual information about term insurance. So it's not going to tell you how to buy a term insurance policy. So basically just, for is a big picture side. What is term insurance, right? So it is conceptually how you understand it. Then, then you can, if you want to buy a term insurance, so you can go to the market to look into it. So this is just the general information. Term insurance. So a term life insurance policy is agreement between you and a life insurance company. So it's agreement between you and the life insurance company. So you agree to pay a premium for a specific period of time, usually between 10 to 30 years. So when we talk about term insurance, we usually say, well, it's a 10-year term, 20-year term, or 30-year term. So it's a term insurance. So that's it. So within these terms, that let's say within 20 years, you allow to renew those policy without, go through the underwriting again. So in turn, there's a guaranteed death benefit that a company promises to pay to your beneficiary, typically your family. So that's why you get life insurance. So basically, you pay the premium. When you die, your beneficiary will receive the death benefit. So that's life insurance, right? Then the death benefit is almost always paid out in income tax free lump sum cash. So for life insurance, you always know the death benefit is income tax free. You do not pay income tax on the death benefit to the beneficiary. So that's something. A term life policy has no cash value components. Once the life insurance term is over, there's no value or payout to your family. So, term life insurance is very clear cut. You pay the premium. The whole purpose is, to insure in case you die prematurely, right? So that's there's no other like other investment, whole life insurance, they have a cash value. So term insurance, no such thing. So you pay premium, then you get death benefit if you die. If you don't die, so all the premium you paid is gone, so nothing left. So basically, you just have to know for term life insurance, they said you guarantee the premium for within the period of time, right? Then you pay the premium, then guaranteed death benefit, then no cash value. So usually for the term insurance, they are annually renewable. So annual renewable term policy provides death protection for 1 year at a time. So basically, each year they only, like your auto and the homeowner insurance is renewed each year. So that's it, because they only insure you within that year. The policy renew each year with the payment of the premium due. This form of insurance almost always has the lowest initial premium because the risk of the death, the mortality rate is relatively low when insurance first sold, and the risk is priced at 1 year at a time. So basically, when you are young, the premium is very, very low. It's only like, maybe couple $100 per month, something like that, even lower. So compared to whole life insurance, it's very expensive. So term insurance premium are based on the estimate cost insured the individual for interval of 1 year. Again, it's only insure you within a year. Most insurance company permit a term life insurance policy. Most insurance company permit the term life insurance policy owner to keep the policy in force up to age 70 or so, sometimes even longer. So 1 year death protection, right? Renew each year. Lower premium at the younger ages, high premium at older age. So that's something. This is a term insurance. You can see male mortality rate comparison. So this is male age 25 through 85. You can see the mortality rate per $1,000. You can see increase dramatically. If you're 75, it costs you $43,000 per year, I guess. Then, to insure you a year. Then you can see if you're 25, costs you basically nothing, $1,000. So you can see here for term insurance, the things, if you only insure 10 years, then 10 years, after 10 years, still want to buy life insurance, you may have to pay higher, premium, much higher than higher than the whole life insurance. So that's something, because there's you have to go through the underwriting again. Level term. So level term, basically renewable term policy generally have a guaranteed maximum premium and are renewable for the specific period of time. So level term basically said, well, you can pay the same premium for a period of time, right? So that won't increase your premium. So the longer the guarantee for the level premium, the higher the premium cost. A policy has a guaranteed level term till 100 or 10 will have a premium approaching that whole life policy. So basically said, well, if you want a 30-year level term, term life insurance, then the definitely the premium is higher than the 10-year, right? If you want to guarantee, you can renew your policy all the way to the age of 100, so that will cost you premium probably is as high as the whole life. I don't know why you get until you're 100. At that point, I think you just buy the whole life insurance rather than the term life insurance. If anybody will suggest you buy some term life insurance until your age 100, I think you can. First of all, if their price is about the same with the whole life, that's rip-off, right? You definitely should just buy the whole life rather than a term life. While some insurance company permit the policy owner to renew a term policy by merely pay the premium. So we have a re-entry term policy. So basically permits the insured to be underwritten every 5 years or so. If the insurer is still insurable in the same classification, the premium may be actually drop in the 6th year, and for other policy, premium will increase minimally. I think only that you agree to do this, you probably they offer you significantly lower premium, right? You say, well, okay, I think I'm gonna be healthy in 5 years, so I am only pay very, very low premium to do this, then probably makes sense to do this. However, I don't think it's a good idea to do this at all, because most people, every 5 years your health condition may change. Usually you get older but less insurable, right? So unfortunately, if the insured is not the same physical condition, the premium will increase significantly. Exactly. So some premium can cost triple or quadruple. Yeah. So don't do this. I mean, you just get the 30-year or 20-year term. That will be great. This is something is not really being used very often, called decreasing term insurance. So what they say is that, well, we will not increase your premium. Your premium let's say remain, for let's say your premium remain $100 per month, then for the rest of the term. So but the amount of the death benefit are gonna decrease. So this one usually being used for like cover the mortgage. So if you have 15 or 30 years mortgage term, so because you worry about when you die, then your family cannot pay the mortgage, so then you can buy the life insurance to just cover the mortgage, right, payment. For these reasons, typical is 15 to 30-year policy. However, it's less common today because people do not live in one home until they pay off and they move. They often obtain large mortgage or refinance. So in this situation, that is less common for decreasing term life insurance.